If you own a condo, you're selling a condo, you're buying a condo, or you're an agent who works with condos in New York City, I need 5 minutes of your time right now. Because on August 3rd, 2026, the rules for how condos get approved for a mortgage are changing in a big way. And if you don't know this is coming, it can blow up your closing. I'm Brian Scott Cohen, your mortgage guy, and this is what every buyer, seller, and agent needs to know. Let's start with the headline. The rules behind most conventional mortgages just retired something called limited review. For years, if a condo building was established and the loan met certain equity and occupancy requirements, we could get away with a lighter, faster review of the building's finances. That's gone. Starting with loan applications dated August 3rd, 2026 or later, any condo project with more than 10 units has to go through full review. No exceptions based on loan to value. No exceptions based on how much the buyer is putting down. What does full review actually mean for you? It means underwriters are now digging into the building's budget, its reserve funds, any pending litigation, and the master insurance policy every single time. So, if you're a buyer with 50% down and perfect credit, that used to get you the express lane. Not anymore. The building itself has to check out. Now here's some good news buried in this. If you're buying into a small building, 2 to 10 units, and it's not tied to a bigger master association, that project can now skip project review entirely under a waiver. That's actually an expansion from where we were, which only covered 2 to 4 unit buildings. So small buildings just got easier. Everything above 10 units, just harder. Next, let's talk reserves, because this is the part that's going to catch boards off guard. Right now, if a building's reserve study supports setting aside less than 10% of the budget for reserves, lenders can still work with that. As of August 3rd, that exception disappears. If a project isn't budgeting at least that highest recommended reserve number from its own study, it will not pass review. No workarounds. So if you sit on a condo board or you're a listing agent working with one, this is your sign to get your building's reserve study updated and get that budget in line now, not in July. And keep this on your radar too. Starting January 4th, 2027, the minimum reserve requirement itself is jumping from 10% up to 15% of the annual budget. That's a separate deadline, but boards should be planning their 2027 budgets around it right now, because raising monthly assessments doesn't happen overnight. One more change specific to Florida. New and newly converted condo projects there used to require a full project review process. That's called PERS for these conventional loans. That requirement is being replaced. Now those projects follow the standard new or newly converted condo guidelines instead of the mandatory PERS process. That should ease up financing on new Florida construction, which has been a real pain point. And finally, investor concentration. Established projects used to be capped at 50% investor ownership to qualify for full review. That cap is gone. So, buildings with a heavier mix of investor-owned units now have a real shot at conventional financing they didn't have before. So let me break down who this will hit. If you're a buyer, expect your building's paperwork to matter more than it used to, even if your financials are flawless. Ask your agent early whether the building has an updated reserve study, because that alone can make or break your timeline. If you're a seller, especially in a larger building, get ahead of this. A stale reserve study or an underfunded budget can scare off financing before you even get an offer. If you're an agent, this changes how you pre-qualify a listing. Before you take on a condo listing in a building over 10 units, you want to know the reserve study is current and the numbers hold up. That's now part of your job, not just the lender. And if you're on a board, this is the moment to get your reserve study updated. Align your budget with that highest recommended funding level and start planning now for that 15% requirement landing in January 2027. Look, condo lending has always had its quirks in this city. This is just the next chapter. The deals that used to sail through on a light review now need the full picture. But if you prepare for it, none of this has to slow you down. If you've got a deal in the pipeline, a building you're worried about, or a client asking questions, reach out to me directly. I'll walk you through exactly where to that line. Might steer you. We're going to draw in the comments below. Welcome to Drive Ackley My Channel Building Stands. If you like this video, let me know in the comments below and subscribe to my channel. I'll see you in the next one.